So this video is going to be a live trading on how I made $2,100 on SPY puts, on the S&P 500 puts. Um, Obviously, I'm recording this intro after the fact, but I want to briefly introduce you guys to what my layout looks like and what you guys are actually looking at. So on the top right, we have ES, which is the S&P 500 future on a 5-minute chart. And on the bottom right, we have a 15-minute chart. And then on the bottom left, we have a 30-minute chart. Now on the top left over here, we have a active trader set up with the option contract we're looking to trade in at. So what we can do is we can buy or sell based on the limit price we're looking to enter at all through the screen without having to go back and forth through the option chain. So that is active trader. Now I have time and sales up here, which are all sizes, and I have level 2 up here, which is going to show me the ask size, the bid size. This helps me with our supply and demand strategy. Obviously, we want to see what levels have stronger sellers, stronger buyers, etc. And I have the news up here because it stretches out my level 2, so it doesn't make it as wide, and it doesn't make me have to look back and forth through a stretched out level 2. And then obviously volume and stuff like that. So in this video, you're going to see we traded SPY puts, even though we're not looking at the SPY stock chart. Reason why is SPY is an ETF, and it's an ETF of the S&P 500, which is also a derivative, obviously, of the S&P 500. And what ES is, what we're looking at, is the S&P future itself. So obviously, if ES is coming up, means the S&P is coming up, which means SPY will be also coming up. So we trade SPY because we trade options, and SPY is the option for the S&P 500. So if you guys learn anything out of this video, please drop a like, please subscribe. It would help me out a lot. I really would like to do more live trading like this. So if you guys have any questions, please drop a comment. Like I said, like and subscribe. Okay, so what I'm looking for here is a rejection of this 30-minute supply. I'm looking to play puts on SPY. Let me load actually in SPY contracts. So we have 4-hour demand 23.51. I'm gonna have a target of about 23.50. I'm gonna play the 237 puts. I'm gonna load them into my option chain. All right, so what I'm really watching here is a move into this 30-minute supply zone. I'd like to see us get over this high a day, make some longs chase this. I want to see retail chasing this into a supply zone where institutions have big buy orders, or big sell orders in this case, since we're talking about supply. We have an order imbalance where supply exceeded demand. So what they did is they made price look attractive to longs. They made price look attractive to buyers here. And then they unloaded price and created a huge supply imbalance. So what I'm waiting for is this 30-minute supply to get tagged, and possibly those orders, if we're going to reject, those orders are going to get filled, and retail isn't going to be strong enough to create enough buy orders or create enough demand to exceed the supply. So really right now it's a waiting game. I want to see a move into this 30-minute supply, and I'm not going to get in right away. I'm going to wait for a rejection. I want to see on a 5-minute chart, I want to see either a candlestick rejection, or I want to see a lower high. So it's just really a waiting game right now. I got the contracts. I got my SPY puts loaded in here. I'm going to do 10 contracts to start off. It really also depends on the reaction we get. If we get a strong reaction, I'll either look to scalp it, or if we get a nice reaction, this could lead into, what do we have? We have 4-hour demand at 2351. So again, this 4-hour demand is from a 4-hour chart. We have a zone where demand exceeded supply. So when price re-enters that demand zone, we're going to have an order imbalance there, so we should be able to bounce off, and those remaining orders from the institutions, smart money, hedge funds, etc., are going to get filled, and retail isn't going to be strong enough to bring it down. So that's what I'm looking for in supply in the supply zone, and that's also what I'm looking for in this demand zone. And obviously we're selling in supply. Hold on a second. So I want to see big red orders on the time and sales here. I have it set for 5 lots or greater on the bottom right, and I have it set for all size on the top right. So I want to see a nice 5 minute. I want to see 2 candles reject like this, like we're getting. I'm going to set my order. Okay, I'm gonna enter. Okay, I got 10 contracts at 85 cents. I'm in SPY 237 puts. Again, we're trading ES or charting ES, not looking at SPY, because ES is open throughout the night and we have different supply and demand zones that form throughout the night when SPY is not trading. ES, the E-mini, the future, trades throughout the night and SPY does not. So we have zones that we can see only on the E-mini and we cannot see on SPY. So I have a target of 2351. We also have demand in this area of 2390, and then a stronger demand, a 5-minute demand at least, at 2375. So I really want to see this reject. It's looking very, very nice right now. So I got in 10 contracts, 85 cents. It cost me $850. That's the most I could possibly lose, even if we hold this to expiration. But my stop loss, I held mental stop losses when I trade these zones. My mental stop loss is at 2460 when this zone becomes invalid. When the supply zone is invalid, we obviously break above that pivot. We break above that supply zone, and then we price maneuvered through that whole zone, which means all the orders that are there that created that imbalance should have been filled. And if we don't get that reaction, then it's obviously an invalid trade. So we have a 30-minute supply. Again, target is down here. If we do hold value in the supply zone and we do fill those orders, I'm going to look to short at this 1 hour supply at 24.87. But like I said, we have to come above this zone. And if we start rejecting like we are now, it's going to be a good trade, and I could see price move into the 2380s, 2390s, and possibly even the 2350 area if we do have a nice trend change. So keep you guys updated. We'll see what happens here. Okay, so now we're above my entry. We're still in the supply zone. I'm really not worrying right now. Like I said, I have to wait for price to get above the zone for the trade to be invalid. Yes, we're down on the position, but the trades aren't going to work right away. You have to let them develop, and you have to have a good enough risk management plan and a good enough stop where this one trade is not going to take you out of the game. And you have to have a high enough stop where you have to let the trade breathe too. Just because we broke above my entry or even high a day doesn't mean I'm going to get scared and exit the stock. I have to let this, and I have to follow my plan. If you don't follow the plan and you deviate away from it, you're never going to find consistency in your trading. It's just never going to happen if you deviate away from the plan. So the contract's 68.73. I'm down almost 20 cents, 17 cents. Not a big deal. Like I said, these zones are very powerful. So I would like to see a rejection kind of soon, because the more times that we do go in these zones and the higher we do go, the more chances of those orders getting filled. And if they do get filled a lot by these retail traders, then it's not going to be like a brick wall that when we do have supply. So I'm really just looking for a nice rejection out of this level, and we should see a decent move. I mean, supply zones in this type of market conditions have been working. Demand zones have been working really well. So anyway, just wanted to come back in here and just say that even though we're coming above my entry and we're above high a day, doesn't mean I'm bullish on the stock. What the heck? And it doesn't mean that I'm gonna get scared. I have to just stick to my plan. My exit's up here. I'll update you guys, I guess, when the next move happens. Okay, so the 15-minute candle just closed. Down here in the bottom right, we It was an inside bar, which is obviously bearish now, because we're coming down and we're making a lower high. The 5 minute now looks really bearish. We broke the trend line. We're rejecting supply. We're making lower highs, and it looks like a nice downtrend forming on a 5 minute chart. And then if we go to the 30 minute chart, obviously you're not going to see that much because it's a 30 minute candle. And but we are rejecting this 30 minute supply pretty nicely. Now we're breaking this uptrend line out of supply. 5 minute candles are looking like they're in a downtrend, and this 15 minute chart is starting to look more bearish from what it was, and it was bullish. So now it's starting to look like it's switching direction. All right, there we go. We're rejecting. It's looking like a good trade. We just formed another 30 minute supply zone. Again, trend line break. We're coming down to my target. My first target, I really want to see how price reacts to 23.85-ish area. But if not, I'll look to the 5 minute demand at 23.74. That's obviously a nice trend change of a 5 minute demand. So that's my first target. Like I said, I'm not going to just get out right away when price goes there. I'm going to wait to see the reaction. You want to see a reaction at these levels. So if we start bouncing here and we get a nice reaction to the upside, buyers are stepping in, then maybe I'll look to scale out or I'll get out of my full position. But this is my first target down here. Like I said, you need to wait for a reaction. You shouldn't just get in blindly at a supply or demand zone or even a support or resistance zone. You have to wait for a reaction from either buyers or sellers and see who is more interested. That is a key point right there. All right, so I'm just waiting for this 5 minute candle to close. This can still come down. It can still come down and create another supply zone because of this basing candle right here. So I'm just gonna wait and see how this closes. If it closes strong, then I'm gonna get out. If it closes weak and bearish, I'm gonna stay in the trade. But this, like I said, is looking very good. It's a great trade. I'm up currently to 218. I'm currently up $1,300 from a $850 investment, which is sick actually. But today is also a Friday. It's option expiration. So if you're not careful, you could lose all the premium. So we have another 50 seconds before this candle closes. If it closes as a red candle, I'm going to stay in the trade. If it closes green, I'm either going to scale out or get out the full position. It depends on how high we close in this 5 minute candle. But the 15 minutes still bearish, and the 30 minute obviously is still bearish. So let's see. Another thing I want to mention is the supply and demand zones. They give us defined risk and they give us a defined reward. Before I get in the trade, which is important, is I know where I'm going to get out and I know where my target's going to be. Like I said, I had a target for the 2380 area, and my other target was the 2350 area, which is 4-hour demand. So let's see what they do with this candle. We have 5 more seconds. I'm going to get out. Okay, that was just a mixed reaction. I'm just going to, let's see. 1 candle, 2 candles. Yeah, I'm going to get out 5 contracts. I'm going to keep the other 5. So now I'm in a 5 contract. I just scaled out half. This is good to protect your profits. You don't give up any other profits if we do move up. And then I could obviously, like, I guess, lower my stop right now since I did scale out half of my trade. But I am expecting this to reverse up because we did bounce off 5-minute demand. So maybe we'll get into a move into this area over here. And then possibly another move down into my 4-hour demand target. We'll see, but I scaled out. I already locked in $600. So we'll see where the rest of the 5 contracts go. Wow. All right. So we flushed below the 5-minute demand, and then look what happens. We bounced up. We came into it as acting as resistance. And then now we're back, or we're in 4-hour demand. So I'm going to lock up my profits. I'm just going to wait maybe for a longer candlestick or some type of reaction, like I said, but I can't complain. These contracts are now at $3.94 from 85-cent entry. So these remaining 5 are $1,500, and then I already locked in, I think, 600 or 700 something from the remaining five. So if we start bouncing, like this 4 hour demand zone should, it's a longer time frame level, and I think it really should bounce this market. So you know what? I'm just going to, yeah, you know what? Look at that. Look at that reaction. It's 7 points, 10 points right there, really fast. So I'm just gonna lock that up. Boom. Okay, so I scaled out my remaining five. I'm all out, from 85 cents all the way to $3.60. It was a total of I got in at 1041. Where's 1041? I got in at 1041. I got out at 1224 right now. So that was an hour and a half, almost an hour and 40 minutes. Good trade, $2,100, $2,160. It's great profit. Low risk, high reward trading setups, trading supply and demand. That was a great trade.